All right, all right, all right. I think that this is working here. I'm just going to check the audio real quick. Check it, make sure you guys can hear. Get into the chat there. All right. Is this coming through okay? Bring it up a little bit. All right, all right, all right. I think that this, yep, that sounds good there. And all right, all right, all right. Sounds good there. What up, Aladdin, Crypto Boy, Bit Genie? Thank you guys. You guys can hear me. All right. Well, let's dive right into it. We had a good giveaway. Shout out to Crypto Boy. He was one of our winners from the other day. So shout out to him. Let's get this off here and let's talk about what we all are here for and what we're going to learn today. So we've gone pretty deep now into some of this stuff here. Aladdin, thanks for reposting the stream. Super helpful. I appreciate that. Crypto Boys on both YouTube and X. I double appreciate that. So what have we learned so far? So I'm just orienting ourselves. We are in, of course, Whale School. We've talked about it. You can use the link to the bottom right to sign up. We have some cool stuff planned. We have this Kyle Doops cohort that starts on Monday, I believe. It's in 5 days, 18 hours. I am registered. We are ready to go. So going from the start, we started out with risk management for the most part, and risk management was actually a really good foundational episode that I think that everyone should go back and familiarize themselves with, because it really talks about like how you manage your bankroll, how you can get into crypto trading without going broke. Because one of the main things that I'm noticing, I see it all over my timeline. If I could pull up my timeline right now, you have a lot of people who are panicking. They're all worried because the prices are down or the prices are up or they're not up as high as you want. Guys, managing your emotions and being able to manage your risk are like hand in hand. They're the foundational blocks of being an effective trader. And that's why we preach a lot about taking profits on this channel. And if you've taken profits, you're not worried about anything. I'm not worried. And you guys shouldn't be either, because if it keeps going up, then that's great. We're going to make more money. And if it goes down, well, at least we've been able to take some profits and we're going to be able to find better opportunities. So risk management might be my favorite part so far, because I think that it does lay that foundation for everything. Shout out Isco, Boy T Spaceman, Bit Genie, of course. We're getting a good little group, man. We're getting a good little group for the trading strategy. So next we went on to support and resistances. We learned about horizontal and diagonal supports. The horizontal supports are obviously the ones that were the most impactful, and those you wanted to connect the bodies of our candlesticks, where with our diagonal resistance and support trend lines, you could actually connect the top and bottom of those wicks, so the full candlestick. And then we did go into candlesticks, and we learned about a few different types of candlesticks. There were many of them, but some of our favorite were, I believe, the pin bar candlesticks, where if you had a candlestick and you wanted to determine whether or not the next few candlesticks were going to be up or down, you look at the pin bar candlestick, and it is a candlestick that has, this is where I wish I could draw. You guys want me to try to do, am I able to open, like if I open Paint right now, will I be able to do this? Because it's going to be so much easier if I can draw. Let me see if I can add a window. Can I add a window of Paint? Let's see. I'm just going to see if I can do it on the fly. See, I don't know why it's only black. Like, why is it black there? Oh, there we go. Wait a minute. We did it. Look at this. This is live, guys. This is what we're talking about. There we go. That is expert. Forget about learning about pin bar, this, that. Doesn't matter, guys. We just did it. Okay, so a pin bar candlestick is when you have a, and you guys can correct me because you guys are all experts on this too. When you have a candlestick, let's say I'm gonna draw one right here. Okay, here's the body of a candlestick, right? And you have a very long wick down, and then you have a little bit of a wick up here. So it's like got a long wick. And what it is, I believe, and again, you guys, please correct me if I'm wrong, because you know we're doing this together. It is when the wick, this bottom wick, this is for a bullish pin bar. It's when the wick here takes up more than 50% of the total body. And we can look at that by using fibs. So it's like takes up more than 50% of this whole thing here, right? And then the actual body of the candle closes within the top 25%, just like that. If it closes in the top 25% of this big wick, then you have a bullish pin bar. And then, of course, on the alternative side, you have a bearish pin bar. If you have a giant wick on, oh my God. Okay, I'm not an artist. This is why I stick to the analytics. You have a giant pin bar on top. You have a small pin bar here. And it's the same type of idea. So if this entire thing is 100% and this is greater than 50%, and this closes the body in the bottom 25%, then all of a sudden we have a bearish pin bar candlestick. And we found that through our course that one of the ways to make this the most effective was when they were at the bottom or the top of a longer term trend line. So if it went something like this, it would indicate that it was going up, right? If we were going down here through our trend line was down, and then we found a pin bar candlestick that was just bouncing off of the support line, then it indicated that we were going to go up, and opposite for if we had a bearish pin bar candlestick. So I see you guys are crushing it over here in the chat. Absolutely correct. Same with the bearish. Yep, we are going through it. We did miss our first question the other day. I believe that Dracul and Halamand, well, I don't really know how to say the name, but I don't see him in here right now, or I would have been able to say it correctly. They were saying one thing and they were actually correct, but we have notes for Kyle. So we have notes specifically on this, because speaking of pin bar candlesticks, and by the way, I'm going in depth into this because they all build off of each other. So this course is meant to build off of each other. So you get, when you look here, we'll get rid of the paint here. I'll clear this up. New paint, don't save. All right, there we go. So when you look at this, they all build off of each other, right? You have to have good, solid bankroll management to have money to trade. Then you need to understand very basic support and resistance structures that are made up of candlesticks. And then you're going to look at all of those candlesticks combined, and they're going to make a chart pattern. And that's what we're going to learn about today. So that's why I wanted to go over it a little bit more in depth. We've taken about, 5-6 minutes or so to go over what we've learned so far, so that if someone's just joining in and they're saying, I am uncertain as to what I'm going to learn today, then that's what you're going to learn. Now, the final points I'll say before we dive right into this class is, and I'm going to just open this up here.
Just like with candlesticks.
This is why when you understand the markets and you understand all the things that we just talked about, you have a much deeper and better understanding of the markets, and you're not afraid. Shout out to John DeFi, who also reposted the stream. Appreciate it a lot. You're not afraid because you're able to look at these charts and look at these patterns, and you're able to understand a little bit better. And again, we're not trying to be perfect 100% of the time. We are trying to get to 60, 70, in a elite case, 80% of the time correct, with some magnitude. And that will help you just be at peace. You're not going to be stressed out because you're going to understand what's happening. And it's not going to be what the timeline is, which is emotion. You got to understand the algorithm, the Twitter algorithm, that timeline, it wants emotional responses because it thrives off engagement, triggering people, making people panic, making them buy, making them sell. We opt completely out of that. And we say, hey, that's great. We see what's going on the timeline. You know me, I love social media metrics more than maybe anyone. But we're also then going to be able to layer that in with some very heavy macro level TA, which isn't that difficult. We're learning it together, and we're going to be able to say, hey, everyone might be a little bit afraid, but we are not, because we understand these things and we are managing our risk appropriately. So today in chart patterns, we're going to get an intro to chart patterns. We're going to look at bullish patterns, bearish patterns, neutral patterns, and then we're going to have a quiz, which we've been crushing the quizzes. Although, like I said, we did get one wrong the other day.
Chart patterns also give you insight into the psychology.
Let's check this out. Let's see what they got cooking for us for chart patterns. He already starting out with some alpha here, so I'm going to rewind it for a second.
Just like with candlesticks, chart patterns also give you insight into the psychology of market participants. But the power of chart patterns can be taken to a whole new level, because you can predict with a high degree of predictability where price will go. You can do this ahead of time by actually looking at the chart pattern and identifying a measured move of where price will go and therefore setting targets. This means that if you can recognize a pattern developing and you can time it with the confluence of a couple of other factors, it means you can catch some major moves within the market. Those are moves both towards the upside and the downside. So in this lesson, I'll teach you how to identify some of the most powerful chart patterns, which I've used many times before. I'll show you how to calculate the measured moves so that you can predict where price will go and accurately trade the market. When trying to identify chart patterns, it's really important to understand that they can be split up into 3 different categories. That's bullish patterns, bearish patterns.
Let's just pause here and take a look. Big shout out also to Crypto Emery, who reposted the stream. Look at the types of patterns. We're going to see what we go over. Before we go into that, Kyle said something at the very beginning where he said these patterns kind of capture the collective psychology of the market. So when you look at the timeline, you can kind of get an understanding of what that psychology is. People panicking, people excited. The fear and greed index on CoinMarketCap is a great place to look for that as well. But the actual candlesticks and patterns that are created, it's like I can tell you take profits, but if I never take profits, those are 2 different things. The actual chart patterns, they are gospel. And the reason they're gospel is because people can say whatever they want on the timeline. They could go take pictures with themselves in front of their Lamborghini that's rented. They can claim that they've got all this money, and maybe they don't. But the actual candlesticks and chart patterns, that is truth. That shows who is buying and who is selling and how much. You can't fake that. That cannot be faked, at least not on charts that are being traded with volume and size. I get it. On Dex Screener, when a project has 30K of volume, it can be manipulated pretty easily. But when you're talking about the macro level, total crypto stock market, or total crypto market, S&P 500, it is very difficult to manipulate that, especially if you're you or me. Now, if you're a hedge fund or you're the president of the United States, of course, you can do that. But that is capturing the true psychology of the market. And so the types of patterns that we're going to look over: bullish, bearish, and neutral, and legend, continuation pattern, reversal pattern, and neutral pattern. I love this. I actually want to screenshot this. Hold on. Sorry, guys. We're doing a lot of stuff on the fly here, but we're going to screenshot this. I'm going to drop it in our Telegram for later. I'm going to say, I like this here. Here we go. And then we're going to keep watching. But we got a lot of cool things that we're going to be learning.
Neutral patterns. So in this lesson, I'll take you through each of those different categories, show you how to identify which ones are bullish, which ones are bearish, which ones are neutral, and then most importantly, how to trade those patterns. So I'll see you in the next video where we'll continue with the bullish patterns.
All right, so we're going to be checking out bullish patterns here in a second. I also have my notepad open so we can ask Kyle questions during his live cohort.
In the previous video, we just
I should be able to get up there on stage. So we have some questions already for him.
How there's 3 different categories for these chart patterns: bullish, bearish, and neutral. We've created a cheat sheet for you, which you can see over here, and you can also download it below.
Oh, wait a minute. I want to download this. Okay, hold up. This is crazy. This is absolutely bullish. Okay. I will get this downloaded and get this posted out. I don't think they'll mind. I'll at least get screenshots. We'll at least get it in the Telegram.
This is a cheat sheet of all the different chart patterns which you can print out and refer to as we go through the rest of this lesson. It's a cheat sheet which will make it easy for you if you keep it right next to your trading desk or your computer so that you can easily recognize these patterns when they do play out. Now, it's very important to understand that when it comes to these chart patterns, they can morph and change. So what may initially start to seem like a pennant could easily morph into a flag, a bull flag or bear flag, and that can start to transition into another pattern. So you need to constantly reevaluate the patterns that you're looking at and understand the rules of where you go wrong and where these patterns start to become something else.
So I don't know if anyone plays chess, but I've played some chess in my life, and one of the things that you learn about is opening patterns. And so there's openings in chess. There's a set order of moves that people have kind of figured out either with engines or through trial and error or through just the game being around for thousands and thousands of years, right? And one of the things that you learn about is you learn about transformations. And so when you have a opening that could be a Ruy Lopez, but after a few moves, it could transform into a Queen's Gambit declined, right? Or a Queen's Gambit accepted, or an Evans Gambit. Now, I don't know actually if those transformations make sense or work. I don't know that you can go from a Ruy Lopez to a Queen's Gambit decline. But one of the things that has always fascinated me about chess players is that they think very linearly, but they're always able to adjust to what's happening on the board. So if your idea is to attack the king in one line of the Ruy Lopez, but then all of a sudden it transforms into something else, you have to be able to pivot and transition your plan from, I was going to attack the king, but now I have to defend the center, right? You have to be able to pivot. And that's what Kyle's talking about here. There's going to be a lot of patterns, and they might look like textbook patterns one way or another, but when they start to change, you have to be able to change and pivot.
It's all a very normal part of trading, and it's very important to understand that when it comes to these chart patterns, oftentimes a failed breakout, so if a pattern is indicating price should be moving in a certain direction and it does the opposite, can often elicit an even bigger move in the opposite direction, which is why using protective stop losses in your trading when using pattern recognition is so vitally important. Now let's get into the bullish chart patterns. We've created a separate cheat sheet for you on these bullish chart patterns. If you have a look over here in the legend on the left hand side, the price will be represented in white over there. The chart pattern is of course the blue section. That's what the actual chart pattern looks like. And then the measured move, which is very, very important to focus on, is represented in yellow. Now some of these look similar, but remember they can morph and change. It's your job to pay attention to the nuances and the small little differences. I'm just going to go through a couple of examples over here, and then I'll show you some real life charts, ones that I've actually made serious money from on the bullish side, and then later on I'll show you ones that I've saved money on the bearish side.
I'm hoping the last time he did this, when he was talking about candlesticks, he talked about his favorite, because there's a lot. And he said, these are the ones that like are the most important ones to learn, to understand, to make money. And I'm hoping that he does this here again, because there's going to be a lot of patterns. So if there's some that we could just really heavily focus on, it's kind of like in poker. I'm giving you a lot of analogies today, but it's good, I think, in general. In poker, there's a lot of hands that you can have. I think it's 1,356 possible starting hands. I played poker. So, but if you just like play ace king well, you're going to make a lot of money. If you play aces well, you're going to make a lot of money. Like you can't screw up your big hands. So there's some hands that you have to focus on and you have to maximize, because that's where a lot of your wins are going to come from. So when you have these patterns, I'm sure that the majority of your wins are going to come from certain patterns. And of course, if you understand more patterns, that's better. But if you just understand the major patterns, bullish and bearish and neutral, you're going to make 80% of the way there. And and if you spend 20% of your time on 80% of those patterns, or whatever, you get the point. 80% of your time on 20% of those patterns, it's going to make you 80% of the money, and you don't need to get confused.
So if we look at this one over here, an ascending triangle, very, very high probability trade setup. Ultimately, price bounces in, creates equal highs, but it's creating higher and higher lows, showing signs of reaccumulation. You're going to take the measured move from the base of that triangle all the way to the very top where the equal highs are. Copy and paste that to the breakout point as price starts to leave those equal highs, and a high probability of the time. I use this all the time. I'll show you in the next examples how and why it works out. There it is. It works out. It takes you to the measured move. Another one that I found very, very useful is going to be the continuation bullish pattern, which is going to be a bull flag. Price moves up, then it consolidates, sometimes slightly towards the downside, sometimes it will consolidate exactly equal to the right hand side, and then ultimately you measure the pole section, which is from the bottom to the top of the flag, copy and paste that on the breakout point, and that gives you a measured move of where price should go next. So let's get into the real examples. You'll understand a little bit more when you see the actual candlesticks at play and how it's actually worked out. Let's start off over here with the bull flag. So this is what I meant. Sometimes the bull flag.
Let's see, what is he looking at here? Is this Coinbase stock? What is this? No, this is this going to be Bitcoin? 17K to 20K. Maybe this is an old Bitcoin chart. It's got to be from Coinbase 1 hour candlesticks. I'm showing you kind of top left here. You can see his head's a little bit in the way. Let me see.
Flag will be slanted a little bit more when you see the actual candlesticks at play and how it's actually worked out.
Okay. So I did pause here before his head went up. It is actually Bitcoin 1 hour candlesticks on Coinbase. So this is going to be from some time ago, but doesn't matter. It is relevant to what we're looking at here. Crypto the Kid, shout out to you. He just reposted the stream. He's one of the people who is in the Telegram posting the most about the TA. Some of that great TA that you see, all of it actually that you see right now is from him. So if you see him in the X chat, definitely give him a follow. Crypto the Kid. We've got Dracul and Crypto Boy and Priest in the YouTube chat. So we got a few great people here. We're looking at a chart, Bitcoin to US dollar, 1 hour candlesticks. The time frame is a little bit unclear, but we're going to check it out right now.
Let's start off over here with the
Kalen says old Bitcoin chart.
bull flag. Correct. So this is what I meant. Sometimes the bull flag will be slanted towards the downside, and sometimes it will be completely horizontal, like these ones over here. So this was Bitcoin on the 1 hour time frame. These are actual trades that I took in late December, and you can see over here price was around $17,200.
I mean, I guess I could have just been patient and waited, and he would have told us. What up, Sammy? How's it going?
Ultimately moved up, started to consolidate over here. That gives you the trading opportunity to start to enter the trade. So you have your horizontal box, that is your support level. You have your resistance level on the top, which is going to be the top of the flag, and therefore you're looking to enter in the bottom of that section. Your stop loss goes just below those prior lows on the daily candle, and that shows you that you're looking at a 5.58% move. So
Crypto the Kid, I'm glad you're here because you can watch this with us. So Kyle just said you want to set your stop loss just below the daily close. But aren't these hourly candles? Aren't these hourly closes, or am I crazy? Crypto the Kid, I need to actually get you a link so you can get up here and share some thoughts. But I think they
something that you're going to be stop loss. Ultimately moved up, started to consolidate over here. That gives you the trading opportunity to start to enter the trade. So you have your horizontal box, that is your support level. You have your resistance level on the top, which is going to be the top of the flag, and therefore you're looking to enter in the bottom of that section. Your stop loss goes just below those prior lows on the daily candle, and that shows you that you're looking at a 5.58.
Okay, because these candles all make up a day, right? So we go from 12 to 12 here. That's I'm assuming 12 hours, right? 1, 2, 3, 4, 5, 6, 7, 8, 10, 11, 12. No, okay, so 12 to 12 is a full day. So a full day is like 12 to 13, whatever date those are. Again, I don't know. It's probably UTC, so that's probably what they're looking at here. So this consolidation pattern happened over the course of about a day. I'm just trying to understand for the time frame. You know what I mean? Because one of the things that I have questions about, and this is, I don't know if these are your guys' questions as well, but one of the things that I have questions about is sometimes I'll see traders and they'll pull up a chart and they'll say, look, it's obviously this pattern. But like, it's only that pattern if you view it from that very specific view. And if you look at a different time frame or you slice it slightly differently, all of a sudden now it starts forming a different pattern. And so what I want us to learn is what should we be looking at and kind of what wins out. You know what I mean? We've already learned some of that. Kyle said that what wins out is longer time frames, and horizontal trend lines matter much more than shorter time frames and diagonal trend lines, for example. 0 to 24 is 1 day. Thank you, Kalen, in the YouTube chat, helping us out here, because we're trying to understand that. And like, I'm the kind of person that I like to be overly questioning, right? I want to ask all these questions so that you don't get into a position where you potentially lose a lot of money misapplying a concept. I know that more than anyone. If you misapply concepts, it's okay. That's part of learning. But if you misapply the concept and you don't learn from it, then it's GG. So you're going to lose all your money. Kyle said the daily low, not the hourly low. Okay, Kalen. So then he said the daily low, not the hourly low. So is that, did he just misspeak, or is that actually true? Like the daily close was one of these candles, like that, this candle right here was the daily close. I'll let Kalen kind of catch up. I know. I wish that you were in the X chat too.
percent move. So
There
something
we go. We'll
that
keep
you're
it
going to
rolling.
be
Let me
trading
know.
most likely on leverage.
I'll share what you're saying though from the YouTube chat to the X chat.
And where does your measured move take you over here? There it is. That's the measured move. Price moves up almost to that exact target. Remember, we take some profits along the way, but it almost hits that target, moves into another bull flag, and we take the trade again. This one smashes through the above target, breaking above $20,000. Beautiful compounded trade for leverage, and ultimately that is your bull flags. Here's another real life.
I mean, think about how beautiful that is. Though. Like, I know this is one
on
example that's
leverage.
really good, but like seeing it like this, it makes it kind of clear that the people, when you're just following on the timeline, that say, "Smash, smash, we're going to billions. Here we go, it's billions. Don't ever sell." It makes it that much more crazy. You know what I mean? Because look at how almost scientific this feels compared to, there's Priest. Shout out Priest. He joined the X chat. This feels very scientific, whereas the things that you might see and hear on the timeline, a little bit less scientific, let's be real. A little bit more smoke and mirrors.
And where does your measured move take you over here? There it is. That's the measured move. Price moves up almost to that exact target.
This is
Remember, we
right
take some profits along the way, but it almost hits that target.
Take profits
moves
along the
into
way.
Another bull flag, and we
Preach.
take the trade again. This one smashes through the above target, breaking above $20,000. Beautiful compounded trade for leverage, and ultimately that is your bull flags. Here's another real life example of Bitcoin creating an ascending triangle on the 8-hour time frame. So if you have a look at this chart over here, you can see the preceding trend was towards the upside, right? Price was moving higher and higher. This is why you know the probability is high that price will break out. It's in line with the trend. So
that's actually 200 IQ. So you want to, oh my gosh, this is all stacking. You guys, we're going to be so rich. So you have the overall trend is up. Then you get a pattern that gives you an entry because it starts going down again, right? And now the question is, well, is it going to go back down and return down this way? Or is it going to bounce back and go up? And what Kyle's sharing here is the trend is up. And when you see a pattern that is a bullish pattern that is in line with the trend, it's a much higher probability of continuing to go up and breaking out. And when you have high probabilities and high confidence of things, you can take things for size and leverage. And that is where you print a lot
take
of
the
money.
base of the triangle, we copy and paste that level over here. We enter into the next high low, which is also a trend line. You can see price touches into that. Put the stop loss below the prior lows, and ultimately there it is, the breakout point leading to a massive 27.17% move. These are huge moves without having to use any leverage. You would have made more money than the average traditional investor. Another one to have a look at over here.
That's massive. That's massive. So let me just, I know we're going through this, and I know I'm beating this into our brains. I'm saying it for myself as well, though. I should pull up the timeline here. Let me see if I can't get. Let me see if I can't get the timeline up. Okay. Let's see if we can see this. There we go. Can we see the timeline? Here we go. Okay. Get rid of some of this. All right. So here's the timeline. So look at what a lot of people trade off of. And I love it. These are people that I follow. These are people that I hang out with. These are people that I know, that I DM. But let's take a look at what is getting a lot of engagements. What gets a lot of engagement? How much money do you need? I'll pay. Real answers only. Okay. All right. Well, I don't know. I need a lot of money. That's what I'm going to learn here. Okay, here we go. Could this be the next leg for WAGME? Tony Montana, who I love. I do actually like WAGME. So could this be the next leg? It shows a picture of a chart. The RSI is a little bit oversold, it looks like. And he has a trend line kind of going up on the RSI. Has a horizontal support line here. Could be. I don't know. We're learning. We're just asking the questions. Just kind of asking these questions here. What else? We got Troll talking about the internet IP. A meme coin tier list. Like, look, I love all this stuff. This is a lot of good quality content. But if you were given $1,000 and told, hey, it's time to trade, we're going to trade. I believe most of you would say that this is very likely a much better, more scientific way to trade. You know what I mean? Exactly. Crypto Priest says Tony Montana is a hype guy. Hey, I love Tony. I like him a lot. Absolutely a hype guy. I want him in my corner for my meme coin. Bullish on his pitch, 100%. We'll give it a like. There we go. Go Tony. Right? But we're trading against people like this, and we don't have to trade against them. We can be one of them. We can be one of them.
7.17% move. These are huge moves without having to use any leverage. You would have made more money than the average traditional investor. Another one to have a look at over here, which is a higher time frame chart. Now we'll see if this one's going to play out at a later stage, but it's a cup and handle formation, right? You can see over here, it looks like a cup. There it is. You have the rounded bottom, so price came down quite extensively. Sometimes you have to use a little bit of leeway and discretion because you can see these candles do break outside of the cup, but it's close enough. This is what I'm talking about, how these chart patterns morph and change. It's close enough to a cup and handle. This also happens to be creating a falling wedge, which if you look at your cheat sheet, is a bullish formation pattern. So that is your handle, right? The falling wedge is also your handle.
So the falling wedge, again, I'm a story
because you can see
guy.
these candles do.
The falling wedge is bullish because it is going down slower, right? If these two lines touch,
break outside of the cup, but it's close enough. This is what I'm talking about, how these chart patterns morph and change. It's close enough to a cup and handle. This also happens to be creating a falling wedge, which if you look at your cheat sheet is a.
Okay, so falling wedge, this is for myself. Don't worry, we're just gonna hang out here. We got plenty of time, no problems. Okay, so falling wedge, because when you think about it, if you have a line that's like this, right? And another line that's like this, you know, they're kind of coming close to each other. So the slopes of these lines are going to touch. That means that the candlesticks the lows are actually going up on the candlesticks, right? Because the candlesticks would be like this, but now they're getting a little bit smaller. Red, green, whatever, doesn't matter. Or black, apparently in this case. And eventually, it's going to squeeze down into this and break above this trend line. It's almost like a limit problem. Have you guys ever done like calculus or anything like that? When you have a limit problem and you are approaching a certain point, right? Have you ever done those problems? You're approaching a certain point. It kind of it consolidates on one answer. So even if you have a number series that goes to infinity, you could have some actual solution. Even though it's approaching infinity, you have a solution because you are reaching an asymptote, right? And so then when you reach that here, these are getting smaller and smaller and smaller until you will eventually break out of this, and then that's where you go up. So the reason I bring that up is because, again, for me, if I want to remember that an ascending wedge is, or a falling wedge, sorry, because it's falling this way, is a bullish pattern, that's how I'd remember it. I would look at the chart and understand the concept of why it's bullish. Why is this bullish? It's bullish because you have something that is going like this, and that means that these candlesticks are getting smaller and smaller and smaller and smaller until they will eventually get so small that they will break through right like this, and then all of a sudden now you have the opportunity to go up, right? So that's more for me. I'm just kind of you know, doing it for myself, but doing it for all of us too.
Bullish formation pattern. So that is your handle, right? The falling wedge is also your handle. Price starts to break out over here at 30,560, and we'll see. Go check where price is at now. Did it meet that measured move, which would have been almost a 67% move for Bitcoin? So remember, familiarize yourself with the cheat sheet. And the most important thing to remember is that the preceding trend is very, very important. If the preceding trend is towards the upside, then you know that your chart pattern recognition, being a bullish chart pattern, is more probable and likely to play out. Now, in the next video, we're going to start to go over the bearish patterns. So I'll see you guys all there. Now we're going to have a look at the bearish chart pattern cheat sheet, which you can see.
So for some people who this might be a little bit new to, this is when we are talking about shorting something. This is where that comes in. If you're set up on an account like Blowfin, you can use the link in the bottom right. that I have on the screen, school.cryptobanter.com/whale school, !source equals Soka data. I don't get any money from that. They're just using it to be able to track because they were kind enough to let us go over this course. So shout out to Crypto School, Crypto Banter, and Kyle Doops. But if you sign up for an exchange like Blowfin, that's where I trade mostly, mostly just because it's the easiest one for me to get onto. That's where you can take out short positions. So now you get paid not as the asset goes up, but as the asset goes down. And so that's what we're going to be identifying here and how we can make some money on some of these chart patterns as well. Crypto the Kid said that he took played an ascending trial on ES1 this morning. Asked him if it worked, and he said it sure did, and it's in the comments on the post. So shout out to Crypto the Kid for employing what we are learning
before
about.
You, it's pretty similar to the bullish one, only everything is inverse or reverse. So if you have a look at the charts over here, the high probability trade opportunities are once again going to come from your descending triangle. That's one of the high probability setups, and it works the same way. So the only difference is over here, you have equal lows where price is hitting into the bottom multiple times and creating lower and lower highs. Remember, where should the preceding trend be? Well, in this instance, it would have been up here. So the trend is moving towards the downside. Then you take from the base over there, measure the move, and price should hit that level a high probability of the time. Another one that we'll look at over here is the rising wedge, right? So the rising wedge price is grinding towards the upside, but it starts stalling out. It's getting into a tighter and tighter wedge, and ultimately it has to break down. Momentum starts to come down, volume starts to drop in this type of environment, and you take it again from the base to the bottom and you measure the move. And you can also look, this will offer additional support where the wedge began, and price often moves into that exact level. Let's have a look at some real life examples, and this one is near and dear to me, and there's a strong reason why. It was in 2018 December that I literally saved myself from losing more than half of all my money because I had so much money in crypto at this particular point in time. Everybody was saying that $6,000 was the ultimate bottom for Bitcoin. And you can see over here, the preceding trend is towards the downside. You set in the top around $20,000, came down, bounced, set in a lower high at $10,000, came down to 6,000, bounced another lower high, again, hold that level at 6,000, another lower high, hold that level, and then momentum just started to disappear. Volatility disappeared out of the market, and everybody said that is the bottom. But I sold everything. I said, well, I'm actually going short at this level, and there's your descending triangle. Lower highs.
Hey, shorting Bitcoin at 6K, that's a pretty ballsy move. I will say that. This is where when you hear people talk about higher highs and lower lows, that's the reverse of this pattern here. That's why it's important, because you want to have, when you're setting higher highs and lower lows, or sorry, higher highs and higher lows, that means that the chart is trending upwards. But here where he's saying it's lower highs and lower lows, that's the opposite. That's the inverse of that. And that's why you have this descending triangle pattern here. It's why he went short. And again, very gutsy to go from to short from 6.4 to 3.5 on Bitcoin. Whew. The ball's on this man.
You take your measured move from the top to the bottom over there, take your measured move, and look at that. It hit to absolute perfection. It was a mammoth 44.81% move towards the downside, and most people did not see this coming, but using a little bit of pattern recognition, you too would have saved a whole lot of money. Let's have a look at the next one.
Well, and I will say two things here. Number one, like this
which
type
is
of
going to be
analysis,
and most people did not see this coming, but using a little bit of,
you have to understand that the reason this works is because there's actual volume coming in and hitting. This is the Bitcoin chart, right? I'm telling you, if you try to do this on a 100K pump fund project with $3,000 worth of volume, it's not going to work. It will not go in your favor. You are better off trading the trenches like the trenches are meant to be traded. Focus on the timeline. See what people are saying. See if people are talking about it. Take your profits along the way. It's a little bit more of a gambly type play. The second thing that he said was not many people saw it coming. These charts, these patterns, like they're not hard to identify, right? We're seeing this. It's not like it takes some type of quantum physics to analyze a chart like this. But what I think he's saying is not many people saw it coming because only people who take the time to do exactly what we're doing right now today can see these patterns in these charts. Now, everyone else, you look at everyone else that's in the trenches right now today, not learning this stuff. They're trenching. Hey, congratulations. I hope they make a killing. We're all going to take what we learn and go to the trenches, right? We're going to win in both places. We're going to learn macro level, and we're going to win at the higher level leveraged trades, and we're also going to win in the trenches. We're going to do both. We're not going to be a one-trick pony. That's how we're going to make our money. But if you go to the trenches, you say, hey, what are you trading? Are you trading on a pattern? What are you noticing? Are you looking at anything? You'll get some scary answers back. You'll get, hey, I opened it up. I clicked a button on Phantom, and now I'm in. And now it's a conviction play. And now I'm hoping it goes to billions. Oh, that's great. Are you up? Yep, I'm up. I'm up $10,000. Okay, are you going to sell and take some profits? Nope, I'm going to hold it till it's worth $15 million. Oh, okay. Well, I hope that works. A week later, 30 minutes later, hey, how's your trade? Oh, dude, it nuked. Like, I'm way down now. And I also kept buying on the way down because everyone told me it was going to hit $1 billion. I just had a diamond hand. Diamond hand, diamond hand, diamond hand. Mr. Boss says more screenshots coming. Amen. More screenshots, more screenshots, more screenshots. Look at, I'm rich. Oh, 30 minutes later, it's gone. Because they don't know what to do. They don't know how to trade. And they are just convinced, brainwashed. Don't get brainwashed. We can do this. Trading the trenches isn't that hard. Get your multiple, get some profits. Don't take the screenshot and get out. Or take the screenshot right before you sell. Tony Montana now in there talking to WAGME to billions. Hey, Tony, we checked out WAGME a little bit earlier today. We looked at your post. Actually, here, we'll bring it up. Do I still have it? I do. It's right here. There you go. Here's your post. I gave it a like. Shout out to Tony. Here we go. We'll do a comment as well. Wag Mizzle. Go. We saw you putting a little trend line on the RSI, which we appreciated. And someone said in the YouTube chat that you were the ultimate hype man and they would buy your hype juice all day. So shout out to Tony. Appreciate you being in here.
The next one, which is going to be the rising wedge. This is on the ETH BTC ratio. You can see Ethereum versus Bitcoin over here was moving up in this rising wedge. So you draw in your trend line over there. You draw in another trend line from the top, marking off where those levels are being met as resistance. And unfortunately with this one, you would have only been able to enter on the confirmation of the break. Sometimes you get in a little bit sooner. You can see a strong impulsive candle towards the downside closed over there. And that's where you start to enter. You have confirmation of the breakdown. You set your stop loss above the breakdown level, above that candle over there. And the measured move took you all the way down. That 6.79% downside move, which gave you a 2.68 to 1 risk to reward ratio.
Hey, guys, I told you this is all building on everything that we talked about. So like some of these moves, I'm telling you, it makes people who are degen traders that might put them to sleep a little bit when you talk about the moves. But look at the boxes. We know because we've drawn these boxes together earlier, where here's the downside, here's the stop loss, and the green, of course, is our upside. And so when he said, I think that he said a 2.8 to 1. Is it 2.68 maybe? Maybe it's right here. 268 to 1 upside to downside ratio. That is what we're talking about. We're trying to set up trades where when we win $2.68 for every dollar put in. And when we lose, we only lose $1. If you play that game and the odds are 50-50, you print. You're absolutely printing money. And then, of course, if we can put the odds more into our favor even, we talked about it. We want to be 60 to 70% winners. And if we can get to 80%, then you're the GOAT and you could just retire on your yacht. But even if we get to 60%, 55%, and we're finding trade setups where we're 268 to 1 profit to loss ratios, guys, you don't make me pull up Excel. I'll pull it up and I'll show you guys what that looks like compounded over 100 trades, 1,000 trades.
Down that 6.79% downside move, which gave you a 2.68 to 1 risk to reward ratio. So in the next video, we'll look at neutral chart patterns, which means that price could break either way, either to the upside or the downside. I'll see you guys all there.
Oh, you'll see us there. We're ready for some neutral chart patterns. Saw the bullish.
Following big market moves, the market tends to slow down.
Saw the bearish. And now we're looking for the consolidation neutral type patterns.
And ultimately form a range. Now, this is where you start to find these neutral chart patterns. And the two examples would be either a symmetrical triangle or a consolidation channel. So very quickly, the way that this works is you'll see that price creates equal sloping trend lines where price gets capped in between the two levels. But because it's a slow down period with no strong preceding trend, you're unsure of where the price will break towards the upside.
I was going to say, yeah, because this looks kind of like a ascending triangle or a descending triangle. That's what it kind of looked like to me. And I drew it somewhere over here. I took it away. But the fact that there's no real clear trend going in or out of this triangle, that's why it is called a symmetrical channel. All right. This would probably be a tough pattern.
Or the downside. Now, there's a couple of practical ways in which you can actually trade this. The way that I like to trade it over here is I like to go both long and short. So you can see over here as price starts moving.
If I could offer my advice, which take it with a grain of salt. Kaylin, yeah, I see. Don't worry. I see you in YouTube. I don't know why the link's not working on X right now. A lot of people say that though. I don't know. X needs to get it together. But I appreciate you being in YouTube, still hanging out. I don't know why the X chat won't work. I have it so that everyone can chat. Should be literally everyone. But regardless, this is advice that I would take for people who are learning to kind of make this happen, right? I would focus on identifying very high probability profitable chart patterns. If you're sitting there identifying neutral chart patterns to try to like scalp and say, hey, okay, you know, this is this could go up, it could go down. Don't start there. Don't start there. It's like if you're going to lift weights for the first time in months, don't immediately go and try to bench 225, right? Bench the bar. Do some push-ups, right? Get the easy wins. Easy wins. The highest probability trades, the highest profitability trades. Keep a super tight leash on them. If you think Bitcoin's going to bounce off 100 and run to 110 because of a pattern you've identified, perfect. Let it bounce off 100 and then take profits at 105. Get some wins under your belt. Caitlin said, told you I'll be here. Hey, I appreciate you being here no matter where you're at. If you're on YouTube or X, I love you both the same. But that would be my advice. So we're going to look at these neutral patterns. But like, if I were you all and myself as well, I would just be looking at extremely high upside, high profitability, high opportunity wins just to notch a couple wins under my belt while I get used to setting a stop loss, setting take profits, setting up my account, getting the alerts correct, all those fun things. And then you can start trying to find the alpha in some of the more difficult patterns to identify.
Move up over here and bounce off of this trend line. I look for a long opportunity with my stop below the prior low. And if you draw this trend line coming towards the downside, I'm able to get into a short position over there with, again, my stop above the previous highs. That way, one of the trades will play out and the other one.
Like, look at this. This is some complicated stuff. I'm not going to lie, you guys. We're not ready for this just yet. So we can watch it. We can make sure. But look, he's got too many boxes, too many lines, too many arrows. We'll focus on the high upside ones. The high probability
will stop
ones.
out. This reduces the risk and gives me a hedged opportunity to get into the market. In this instance, price broke towards the downside. And these are not small moves. You can see over here, this was a 31.98% move to the downside. That is just using spot, so without even touching leverage. Now, the other one that you'd look at is a consolidation channel, which is ultimately where a range forms. This is also known as a range where price has equal highs and equal lows. You'll learn a whole lot more about that in the following lesson, so I'm not going to get into too many examples over here, but stay tuned and I will see you all in the next lesson. Cheers for now.
Is that a whale sound, by the way? Is that what that is? I was always kind of wondering what that was. Is this a whale?
But stay tuned and
do we have any marine biologists out there that can let me know?
I will see you all in the next lesson. Cheers for now.
Okay, that is amazing. Oh my God. Okay, hold on. We gotta get the chat chat going for this. Hold on, guys. You know how this one goes. Where do we want it to be? Is it this one here? It's this here. Let me see if I can't. It like won't go up anywhere. Hold on. We got to get the chat. Oh, there it is. We did it. We're getting so much faster. Fixing everything that I break. Put it over here to the corner. All. Zoom in just a little bit here. Little bit smaller. All right, there we go. Okay, I only have the X chat up. I don't have the YouTube chat up, so I'm going to have to describe what is happening over there. We got a few amazing people in, and some of our front of the row, or the kids that sit up front that have the answers. So, a cup and handle formation is a bearish chart pattern. I think I know the answer to this one. I'm pretty sure. We've been cooking lately, and I think that we're all going to know this one because cup and handle was in the bullish chart section. Anyone disagree? I think we're bullish, right? So this would mean it is not bearish. That's false. Anyone disagree? I know there's like a little bit of a delay. I think that's just how the streaming software goes. Kaylin says B. I'm going with B here. Of course, Kaylin is Dracul on X, so he's usually right. So we're going to roll with it. A cup and handle formation is not a bearish chart pattern. No, it is not. Crypto Boy got it on X as well. Shout out to you. Going to question number 2. I'm going to have to hide the chat for just a second so we can read it together. What is the nature of neutral patterns? They always break to the downside. We know that that's not right. C is always break to the upside. We also know that that's not right. So before even reading it, you guys, by process of elimination, I think we're going to get it here. Direction neutral, price could either break through the top side or it could break through the downside. I think that we can do this. Soka, throw down, Mr. Boss says, Soka, throw down a $1,000 leverage trading challenge, 1 hour a day, live only. I'll donate 100. I'll do it. Done. You don't even need to do it. We'll just make it happen. You guys want to do that? A 1,000 a day trading live trading session? We'll do it. I'm cool with that. Mr. Boss, we'll talk. We'll make it happen. What do we run it up to? Crypto the Kid, are you still here? Will you do this with us? We got a B from Sammy. We got a B from Dracul. We're pretty sure that's a B anyways. But now I'm intrigued by this this trading challenge. We got to find a chart. We'll do it together. We'll vote. We'll make it happen. Crypto Boy says B as well. That's a great idea, Mr. Boss. We should do it. I'm down. I am downtown. Let's see here. We got another long one. What is a consolidation channel? A, the price consistently moves in one direction. B, the price gets kept between equal highs on the top side and equal lows bouncing back and forth. Price moves randomly with no clear pattern. So I think that this one's B again, right? But the funny thing is, wasn't the last test insanely hard? Wasn't it like really hard? Like the questions were way hard. Okay, then we'll do it when you're not at work. We know how that goes. I'm at work too. I'm in the closet. True story. Back in the day, when I had my first job, I used to play a lot of daily fantasy sports, and I did a podcast with my best friend growing up. We had all of 0 listeners. I don't think we ever got 1 listener, and I would be at work, literally in a supply closet, talking about daily fantasy players who you could put in and out of your lineup for American football. And that was it. That's what I did. So I was not contributing very much to that company. Let's put it that way. Dracul, Kaylin in the YouTube chat says the last test was harder. I do agree with that. Guys, we're going B, right? The price is kept between like kind of these bounds. It kind of bounces back and forth, more or less. I think that's what happens right here. We're going B. We're doing it. Woo! We're cooking. We are cooking. In a descending triangle pattern, the price creates blank lows and lower highs. Blank lows and lower highs. Crypto Boy, thank you. That was a B. So I am going to go with, I've never heard anyone on the planet say equal lows and lower highs. I don't think that that is a thing that anyone in the history of trading since it began with the West Indies Spice Company, whatever it was called. Is that what that company was called that went and like took over the West Indies and was like really bad and killed a bunch of people? I don't think anyone's ever said equal lows and lower highs. So I'm going to say lower lows and lower highs. That just sounds a lot better. What? 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 Am I crazy? Wait, equal lows and lower highs. Who says that? Did Kyle say that? Did anyone ever say that? Oh my gosh. I'm sorry, you guys. I ruined our streak. Oh, this is so bad. I should have waited for Dracul. He said equal lows and lower. To be honest, I didn't even really like fully
Following
read
big
the
market
question.
moves, the market tends to slow
Hold on. Here we go.
down and up.
We're gonna get to the bottom of this right now. What did they say? Okay. Continue. Okay. Continue. Okay. Continue. Here we go. In a descending triangle pattern, the price creates equal lows. Oh, it's because. Okay. Okay, so descending triangle. Where is it? I saved this. I need to save these. I got to download these chart patterns. Crypto Boy, look at that. This is why this live trading that we do, it has to be live with the crew because we'll print way more money. Don't confuse it with descending wedge. Good point. Kalen in the YouTube chat again. It's Dracul. We know him. We love him. One of our winners, actually. I believe he won the Mambo giveaway. We have a lot of winners in here, actually. Shout out to all you guys. He said, don't confuse it with the descending wedge. That's why I'm going to have my cheat sheet right next to me while we're doing this. While we're doing our live trading challenge, we're going to make it happen. What is a key feature of a bull flag pattern? All right, I'm locking in. We are not getting this one wrong. Price forms a rounded bottom. I don't think so because that's the cup and handle. Okay, where we have a flag. We got this. Price moves down sharply. I don't think that that's a bull flag because that sounds bad. Price creates equal highs and lows. I don't know. Price consolidates after a strong upward move. Boom. I think that's it, right? We have the strong move upward. That's the flag pole. Then you have that little box to the right that we saw. There's some gibberish that goes on in there. And then bang, it goes up. Am I wrong? D? No, I'm gun shy. I'm scared to click the button. We're going D is what I think. I want confirmation from the homies before we get cooked. Before we get cooked again. I have to write the professor. Let him know why we're slacking. This is D. I'm going to do it. Haven't seen any confirmation yet. Kalen says D. It's good enough for me. Whew. We're doing it. In a bull flag pattern, Crypto Boy says D as well. There we go. I know. I saw C and was a little bit tempted as well, but I thought D just fit a lot better. In a bull, after getting the last one wrong, we had to lock in. That's for sure. In a bull flag pattern, the price consolidation is always horizontal. I think it could be slightly down, no? Like, what do they mean? Perfectly horizontal? I thought that it could be a little bit down. A little bit slightly down. See here, here's the rest of the question. In a bull flag pattern, the price consolidation is always horizontal. What are we going with here? It is always, Kalen? It's always horizontal? I feel like he did. Didn't he show that it could be slightly down? I feel like he said that. But it is kind of horizontal. The box is horizontal. It ties in with the previous question. All right. So then it is always horizontal. We're going with true, right? I want to make sure I have that right. So this is a yes, which would mean true. We're going to hit true. Oh, guys. I need like sound effects. I feel like there needs to be something significant needs to happen when that goes on. It's pretty horizontal though, I will say. Like the flag, it was not very down. Yeah, I'm with you. I'm with you, Dracul. I think that one we Oh, I like this question. This is, now we're cooking. Now we're talking. Okay, I'm actually over the sadness from before. I'm over the sadness from before. Don't worry, Drew Cool, because we're locking in on the next problem. We don't have time to be sad. We only have time to get it right. Okay. In the following image, I know, I thought so too. That's okay. We're still cooking. All we need to do is 80%, and we're like expert level God tier traders. We're good. In the following image, which pattern is represented and what should the price action be afterwards? Okay. So that is a horizontal flat on the bottom, angle coming down. We know that is a, what pattern is that? Do we know what this pattern is again? I forget the name of it, but do you remember we talked about it? This is why I like thinking about things in terms of stories. The candlesticks and the pattern is getting a little bit slower. Like it's lower highs, but equal lows. So if it stays equal lows, it has no hope but to think about it like a ball bouncing. You know what I mean? If there's a tennis ball bouncing back and forth, it's going to go like a bunch of bounces here, and then all of a sudden go boom, right? It's going to escape. It's going to have too much power. If this holds constant and this keeps getting tighter and tighter and tighter, that ball that's bouncing, it'll eventually, I said it doesn't take quantum physics, but it'll quantum tunnel through the top line, boom, and escape. Descending triangle. Kalen, thank you very much. Crypto the Kid said, enough is enough. I'm coming in here to save you, scrubs. It is a descending triangle, and we are going to move. Wait, to the downside? Oh my God, dude, I need to study. I thought it was going to go up. What the heck? Crypto the Kid, you need to get in here, dude. All right, so it's a descending triangle, and the price will continue to move to the downside. Now I'm sad. I thought I understood it. Everyone just delete. I'll edit it out. We'll delete it together. It's going down here. So it's not going. It will. This line will eventually cross through this line, and it'll break this this horizontal support. It'll break it, and we're going down, down, down. So sad. Okay, so then from story time for myself, I know it's C. I'm gonna do C, but I wanted to just look at this while you guys are here chatting it through with me. So we're going up, we're going down, we're going up, going down, going up, going down, going up, going down. So you're saying eventually when these lines touch, instead of saying that this line will bust up, this support line will flip to a resistance line and will then continue the downtrend. All right. All right. You guys killed that. I like those. Can we get more of those questions? I feel like I learned a lot on that. Loses momentum and falls off the table. That's a great way to put it. I was thinking of it like a particle, like a a singular particle, a tennis ball, but it's losing momentum and then it falls off the table. Which case indicates a high probability trade setup? Here we go. We'll bring back up our chat so we can see what's going on. Which case indicates a high probability trade setup? So a downtrend followed by a reversal pattern, an ascending triangle, an uptrend followed by a bullish chart pattern, a downtrend followed. Okay, so we need them to be the same. So uptrend followed by bullish chart. That is confirming the trend. We have an uptrend. The trend is your friend. Bullish chart pattern, C. There we go. We did it. It's got to be, right? Going C? I'm going C. I'm gonna keep this going. I wish we knew how many questions there were. Here we go. Oh, thank God. Thank God. Okay. Whew. An uptrend followed by a bullish chart pattern. Okay, perfect. We're going to submit. You'll be redirected to the next lesson shortly. So our next lesson is ranges and trends. We're not going to do that one now, but we have been going about an hour. I would like to do these a little bit longer, to be honest. And I want to try to find maybe a trading challenge would be good. Maybe we could just look at charts and patterns together and do $1,000 to $1 million trading challenge. I know everyone does these, but whatever. We'll do it together and we'll have fun. We'll do giveaways like we always do. And I just want to find time. I mean, what's the other thing that I could do? I could play chess on stream. I could play poker on stream. I could do like everyone else does and do random video games, but not exactly what we're looking for. We're looking to make money. Maybe we start a business together. I'll set up an S corp and we'll just make a business. We'll do a data focused business. I think there's a few that we could cook there. So I don't know if it's tomorrow or not, but we have ranges and trends. That's what we'll be talking about. I might do it tomorrow. I'm looking at my schedule. I think I have time to do it tomorrow. Same time, same place. Everyone will be nice and happy. But I appreciate you all for hanging out and learning chart patterns with me. I am going to put some pen to paper and I'm going to learn. I'm going to download the charts. I'll share those charts with you guys that Kyle and Crypto School have been kind enough to share with us. And we'll talk about it. We had a lot of great engagement in the chat. We had a lot of great engagement over there on YouTube. And, you know, hey, we maybe didn't perform as well on the quiz, but one of those was my fault. So I'll take the blame for that. And then, you know, it doesn't matter. Again, we are just fully focused on making money and learning. That's it. We're learning to make repeatable, focused trades. And if we can do that, we're going to cook the cycle. And by the way, we have been together now for 6 hours, 7 hours learning to trade. And that already puts us in the upper like 1% of people who trade, because most people, I'm telling you, the extent of their trading, you know what it is? It is, I funded a phantom wallet and someone told me to go buy this coin. So I bought it. Now I'm down 94% and I'm CTOing it. And I'm hoping that it goes back up. And by the way, it might. There might be a lot. I know there's a lot of good CTOs out there that are going to cook this cycle, that are sitting at 80K, and they're going to do great. I know that that's the case. But it's also, you know, very difficult to make happen. So that's why we're learning to trade. That's why we're going to make this happen together. You, me, Crypto Boy, Mr. Boss, Crypto the Kid, Kalen, aka Dracool, Crypto Priest, everybody here. Did I forget anybody? I see Alamadine, Bit Genie, Sammy, Tony Montana. You guys, we are actually going to make it because we are learning and educating ourselves. We already are the top 1% of traders. We've done it because we have spent 6 hours learning it. Just imagine when we're actually cooking and taking trades together. We are going to print harder than anyone. So yes, hopefully X will be more accommodating next time for you, Kalen. But I appreciate you guys. You guys, I am going to rug it there. It is much love, and I will talk to you guys on the next one. Should be tomorrow, same time, same place. I'll get the links out should that be the case. But it's much love, and I will talk to you guys later.